October 15th, real estate and mortgage rate update. Let's jump right into the numbers here. You can see 6.27 on a 30-year fix. This is national average rate as of today, October 15th. I based this on a loan amount of $482,048. That basically 20% down on the median home price in Clackamas County. So you can see the principal and interest payment that creates, $2,974 on a 30-year fixed, $4,021 on a 15-year fixed. You can see on FHA, when we got this some rate subsidy for these government programs, these are a bit nicer rates, $2,890, $2,896 respectively. Moving in the right direction, but slowly. So let me show you what's going on here. In the absence of major economic news, the type of economic reports that we get from any of the government entities, those have been stalled as a result of the government shutdown. And so basically trading is pretty sideways, and it's really just mostly technical. So you can see, it's kind of bouncing off this floor here, but couldn't break through this ceiling. Today it tried to break through and then retreated back. So it's very technical at this point. So it's likely that we'll continue to see some sideways trading until we see any kind of breakout news, which is unlikely to happen until we get some economic reports. But we did get some news, which is really why we kind of punched through this line. Yesterday, the Fed Chair, Jay Powell, spoke and talked about basically moving off of the quantitative tightening. So you may recall that when COVID hit, they began what's called quantitative easing, where the government was actually purchasing treasuries and mortgage-backed securities to artificially keep rates down. Well, they stopped that, and they stopped that in 2022, and then also began the runoff of those bonds, which adds additional supply into the marketplace. And in a supply and demand marketplace, when there's too much supply, then things kind of stagnate, and we didn't see, what we did see was quite an increase in mortgage rates that has sustained over these last handful of years. But as the Fed suggests that this tightening program could end soon, that would bode well for mortgage rates. It won't be dramatic because they'll probably begin running off more treasuries, and reinvestment will probably go into treasuries as well. However, it will support improvement in mortgage rates. So this is kind of a bright spot that we can keep an eye on. The suggestion would be that there's 2 remaining Fed meetings this year. And since there are some liquidity issues that this could help, then it's likely that we may see this sooner than later in terms of the Fed meetings. Those Fed meetings, that next Fed meeting will take place on October 29th. So hopefully we'll see this, and oftentimes the market will bake that in before the actual day that it occurs. And so we may start to begin to see some improvement outside of some of this technical trading. And in the absence of any government news releases, we may begin to see some improvement in rates as a result of this. And so that's the last thing that I was going to touch on. As I'd mentioned, median home price in Clackamas County, $602,561, which is down from just 6 months ago of $624. So we have seen some softening in prices, and as I'd mentioned in my last update, that really creates almost a perfect situation for buyers, in that we have homes that are sitting longer, there's price reductions, there's seller concessions, so you're getting credits for closing costs and rate buy downs, as well as beginning to see the rate improvements. Now, this could turn quickly, though. If we start to see dramatic rate improvements, then pent-up demand will enter back into the market. We'll start to see prices move up, inventory levels come down, and sellers will be less likely to provide some of those credits and price reductions. So stay tuned for next week's rate and real estate update. Thanks.